The FTSE 100 sank a tumultuous 8.5% on the open today as the coronavirus outbreak and plunging oil prices dragged the index below 6,000 points. London's blue chip index sank 523 points to just 5,942 points as it opened following a hectic weekend of coronavirus turmoil. Read more. Oil prices and Asian stocks collapse under coronavirus fears. Investors flee FTSE 100 amid coronavirus turmoil. It came after the FTSE 100 lost £59 billion on Friday after a week of steep drops following a £200 billion loss the previous week. Italy placed 16 meters citizens under lockdown in a desperate attempt to contain the coronavirus threat, and the UK counted its third death as infections rose to 273. Traders fled the FTSE 100 for safe havens after oil prices crashed 30%. That came after Saudi Arabia and Russia disagreed on whether or not to cut production. The Saudis said they would ramp up production to flood the crude market with oil as coronavirus hurts demand.Oil prices in sharpest plunge since Gulf War. Read more. Saudi Arabia to up oil production after OPEC deal falls through that left oil prices on track for their biggest one-day drop since the 1991 Gulf War. Russia punched investors in the face as it refused to follow OPEC with further production curbs to match the slump in oil demand caused by the coronavirus breakout. Ipek Ozkardeskaya, senior analyst at Swissquote Bank, said. The fallout of that move saw 10-year US Treasury yields slump 0.5% to a record low as investors piled into safe havens. Bond yields move inversely to bond prices. U.S. stock futures hit trading curbs and U.S. stock futures fell as much as 5%. The 10-year yield now faces the prospect of following Europe and Japan's into negative territory. It is the collapse of the oil price and the end of OPEC Plus that is providing a fresh reason to head for the exits, Chris Beauchamp, online trader ex-chief market analyst, said. Read more. Coronavirus claims third victim in the UK. Oil firms, and US shale oil companies too, will face serious pressures with oil now trading around $30 for WTI and $33 for Brent. Such pressures will include funding problems, spreading through the broader economy and ramping up expectations of more rate cuts, and potentially monetary easing. US futures sank on expectations of a huge Federal Reserve interest rate cut later this month. Traders bet on hopes the Fed will slash rates by 0.75 percentage points after a 50 basis point cut last month failed to lift Wall Street. That forced S&P 500 futures down 5% to hit trading curbs. Asian stocks shredded after oil prices collapsed and Asian stocks were torn open on the plunge in oil prices and rise in coronavirus fears. Japan's Nikkei sank a staggering 5% while the Hang Seng Index slumped 3.76%. The plunge in oil has led to complete capitulation in other markets this morning, Deutsche Bank's Jim Reed said. For more on this story, visit the news article link.